Hi all, welcome to my channel Satish Vlogs. In this video, I would be explaining the concept of a bills payable. What is a bills payable? In which circumstances the concept of bills payable would get arises? What are the journal entries when the bills payable are being accepted? How these bills payable should get reflected in financial statements? All these details I would be explaining in this video. With this introduction, let's move to the next slide of my video. In this slide, there is a diagram which depicts like a cycle. This is nothing but an accounting cycle. What is an accounting cycle? What are the various phases of an accounting cycle? All those details I had already provided in my previous video on accounting cycle. And also the concept of bills payable primarily arises when the business entity purchases goods on credit. With regard to this concept, I had already shared the details in my previous video on purchase of goods or services on credit. Request the viewers to go through these two videos before getting into the details of the current video in order to gain better understanding of the current concept on bills payable. As mentioned previously, I would be explaining my concepts considering phases of an accounting cycle. As part of a first phase, which is a business transaction, my business transaction is bills payable. What is a bills payable? Business bills payable is a negotiable instrument in which primarily there are two parties would be there. One is the drawer who draws the bill. This drawer is primarily a seller, and the other party would be the buyer or drawee. Drawee is the one who accepts the bill, and this bills payable needs to be considered from drawee's standpoint. Okay. In order to manage the bills payable, there is no need to involve or interfere intermediaries like financial institutions, etc. And this bills payable can be payable to the bearer of the instrument, means this can be easily transferred to the third party by the drawer, and the drawee can easily pay this bills payable to the bearer. And this the endorsed, which means endorsed, and also this the discounted bills payable or receivable, the discounted bills payable would be paid by the drawee directly to the bearer of that instrument. Okay. As there are some unique features and prominent features with this bills payable, this has been given a huge importance in the business for managing the transactions. Hope the concept of or the first phase, which is related to the business transaction, the concept of bills payable is clear. Now let's move to the next phase of an accounting cycle, which is a journalizing phase. What is this phase all about? For whatever the business transaction for which the journal entries are supposed to be recorded, right? See, this bills payable is nothing but the reclassification of the amounts from sundry creditors to the bills payable, right? Because once the bills payable has been accepted, the sundry creditors are supposed to get reduced to that extent. So normally the sundry creditors would show the credit balance. In order to reduce, the sundry creditors is required to be debited, and the credit needs to be given to the bills payable. The entry is sundry creditors account at R2 bills payable. Now let's move to the third phase of an accounting cycle, which is a ledger creation or ledger posting phase. What is this phase all about? For whatever the journal entries which were created as part of journalizing phase, for which the accounts are supposed to be created and the entries are required to be posted accordingly. Okay. So primarily there were two accounts against which the journal entries were made. One is the bills payable account and the other one is the sundry creditors account. So against these two accounts, for these two accounts, the accounts are supposed to be created and the entries are required to be posted accordingly as part of ledger posting phase. Now let's move to the fourth phase of an accounting cycle, which is a trial balance phase. Trial balance is nothing but the summary of the balances of the ledger accounts. So whatever the amount, the debit balances which is going to get updated in the trial balance should matches up with the credit balance which is going to get updated under the credit side of the trial balance. There shouldn't be any discrepancies between debits and credits, because as we have been following double entry system of bookkeeping, there shouldn't be any discrepancy between debits and credits. Now let's move to the last phase of an accounting cycle, which is a financial statement phase. What is the critical statements which primarily fall under financial statement? One is the income statement and the other one is the balance sheet. Okay, these entries primarily impact my balance sheet, so there will not be any posting of the entries in the income statement. Okay, now let's move to the balance sheet. The bills payable should get reported under the current liabilities of the balance sheet, and the sundry creditors balance is supposed to be reduced to the extent of the amount transferred to the bills payable from the sundry creditors. Okay, the balance sheet should matches up, because as we have been following double entry system of bookkeeping, and as you are aware, we normally update the balances in the financial statements, taking the amounts which are getting reflected or reported as part of the trial balance. I hope with this the viewers are able to understand what is this bills payable all about, what are the journal entries when the bills payable are being accepted, and how this bills payable should get reflected in financial statements. Okay, if the viewers like this video, request you to like it, share it to your friends, and subscribe my channel for more videos. Thanks for watching. Catch you in the next video.